Hello friends, I am Priyanka Deshmukh, Assistant Professor from KTHM College, and in this video we will study the subject Financial Accounting, and today we will focus on partnership deed, its importance, some contents and some provisions of partnership deed as per Indian Partnership Act. Let's see what is partnership deed now. Okay. The document containing the partnership agreement among the partners is called as a partnership deed or article of partnership. Okay. As we seen earlier, when two or more persons coming together and decided to start business and also agree to share profit or loss from that business, then it will be called as a partnership. Okay. But when they decided these terms and condition in written form or written agreement, then it will be treated as a partnership deed. But next question is that what matter will be included in the partnership deed? It contains the terms and conditions which are agreed upon by all the partners. Okay. Actually, relation of partners will be governed by partnership deed. An agreement may be written or oral, but when it's written, it's called as a deed. Means we can say all rules and regulation and terms and condition of partnership will be governed by partnership deed. Means how the partner will work, how profit and loss will be distributed, how capital will be introduced, how will be the interest on drawings or interest on capital. All these conditions and terms will be governed in partnership deed. Okay. Actually, the Partnership Act doesn't make it compulsory to have a written agreement. Means agreement may be written or can be oral also. However, in case of a dispute among the partners, it is always in the best course to have a written agreement which is duly signed by all partners, and that agreement should be registered under the Act. Okay. Partnership deed contains the rules and regulations framed for the internal management of the firm. Now, let's see some importance of partnership deed. Partnership deed is very important document because it is the written agreement which contains all the terms and conditions of the partnership business. As we seen earlier, all the rules and regulations which requires for internal management are always included in partnership deed. Okay. These internal management rules are very important to run any partnership business. Okay. So these terms and conditions are required there. Then next important is it clears confusion that what should be the profit sharing ratio between partners. Every partnership deed includes ratio like 1:1, 2:3 or 3:4, whatever it may be. Okay. But what is profit sharing ratio? A ratio or proportion in which partners will distribute their profit or loss from that firm. Okay. All partners are bound to distribute their profit as per profit sharing ratio, which is mentioned in that partnership deed. Now, what happened? No dispute or argument will be arise there about their distribution of profit, because all partners have to follow that ratio which was written in that deed. Okay. Next important is it forms the basis of mutual relationship or mutual understanding among the partners. Partnership deed regulates the rights, duties, and liabilities of all partners as well as of firm. So, no partner will confuse about their rights, responsibilities. Every partner will work as per their rights, responsibility mentioned in their partnership deed. So what happened? In future, dispute or any argument will be avoided. Hence, it is always in favor to have a written agreement. Okay. That is, partnership deed duly signed by all partners and registered under Indian Partnership Act 1932. Let's see some contents of partnership deed. First content is name and address of the firm. Every partnership deed should include name of the firm, its proper name. Okay, we can say its legal name, firm's legal name, which is decided by all partners. Okay, then address of the firm. It may be required for communication purpose. There may be different types of firm's address. It may be like office address, main branch address, or factory unit address. Okay, all these address should be clearly mentioned in the deed. Then name and address of all partners. All partners' name and proper address should be mentioned in the deed. Address of partners may be required for further communication with them. Then nature of business and duration of partnership. In nature of business, which type of business will be carried by firm or for what purpose partnership is formed will be clearly mentioned. Then duration of partnership. In this, how long partner will carry their business will be recorded. Duration may be specific like 2 years, 3 years, or maybe up to completion of specific goal or purpose. Next content is capital contribution of all partners. In this, every partners have to contribute some specific amount of capital. It may be in kind also. Okay. It should be clearly mentioned in the deed. Then profit sharing ratio. Now what is ratio? Ratio in which profit or losses are to be shared. In every partnership deed, profit sharing ratio should be mentioned clearly. If partnership deed is silent or nothing mentioned in that deed about profit sharing ratio, then all partners will distribute their profit in equal ratio. Okay, let's take one example. Suppose A, B, C are partners and then nothing mentioned in the partnership deed about their profit sharing ratio. Then they have to distribute their profit in 1:1:1, that is equal ratio. Okay. Then rights and duties and liabilities of the partners. In this, all partners have to act according to rights, duties and liabilities which are mentioned in the partnership deed. Another content of partnership deed is provision relating to the admission, retirement of or death of a partner. Sometimes any new partner want to admit in the firm or any partner want to retire from firm or there may be any death of a partner. Then all procedure related to the admission, retirement or death of a partner will be clearly mentioned in that partnership deed. Next content is rate of interest on capital or loan or on drawings. What happens sometimes? Partners contribute some capital or some amount of loan to the partnership firm. Then partnership firm have to pay interest on that capital or on that loan. Okay. On other hand, sometimes partners withdraw some amount from that partnership firm, then it will be treated as drawing. Okay, then partner have to pay some amount of interest on that drawing. Okay, then this interest on capital or loan or interest on drawings, this interest rate will be clearly mentioned in that partnership deed. Okay, next, salaries, commissions, etc. is payable to any partners. What happens sometimes? Sometimes partnership firm pays some salaries or commission to the partners for work done by them. Okay. Then this rate of salaries or rate of commission, we can say salaries per month or per annum, or commission fixed percentage, per month commission, or whatever it may be. That is salaries rate or commissions rate will be clearly mentioned in that partnership deed. Then settlement of accounts on dissolution of the firm. What is dissolution? Means close the firm. Okay. At the time of close the firm, what will be the procedure of settlement of accounts, or what will be the procedure of payment of liabilities? All these matters should be clearly mentioned in partnership deed. Next is method of settlement of disputes among the partners. Sometimes there may be some argument or disputes among the partners, or maybe between partners or between third parties. Okay, then to solve these argument or disputes, this procedure or solving this dispute method of settlement should be recorded in partnership deed. Next is any other matter relating to the conduct of business. Means above mentioned contents, there may be other content also which can be included in partnership deed. We can say audit procedure, or what will be the accounting procedure of firm, or method of valuation of goodwill, or method of operating bank accounts. There are many items which can be included in partnership deed. Okay, that matter can be included under the head of any other matter relating to the business. Okay. Now let's see some provisions of Indian Partnership Act 1932. First is profit distribution. As we seen earlier, if the partnership deed is silent or nothing mentioned in partnership deed about profit sharing ratio, then profit sharing ratio will be equal. That is, profit or loss are distributed among the partners in equal ratio. Suppose there are two partners, then profit sharing ratio will be 1:1, that is equal. Next is interest on drawings. When any partners withdraw some amount from partnership firm other than business purpose or for personal use, then it will be treated as drawings. Okay, then that partner have to pay some interest on that amount. Okay, that is interest on drawings to the firm. Then this interest on drawings will be calculated as per provision of Indian Partnership Act. If the date of drawing is not given, then average of 6 months interest is charged on drawings. Let's take one example. Suppose here Mr. A and Mr. B are partners. Okay, they both withdraw some amount from partnership firm, that is rupees 5,000 and 4,000 respectively. As per deed, interest on drawing will be 10%. Means interest on drawings rate is mentioned in partnership deed is 10%. Okay. Here you can observe that date of drawing is not given. Okay. only amount is given. Then how will be the interest on drawings will be calculated? Let's see. Interest will be calculated on the basis of average of 6 months. Let's see. Here for A, 5,000 into 10%, that is interest on drawing rate, into 6 divided by 12, that is average of 6 months, is equal to rupees 250. Okay, and same calculation will be for B. Here B withdraw rupees 4,000, then 4,000 into 10% and into average of 6 months means 6 divided by 12 will be rupees 200. Next is interest on partner's loan. Here, if the partners provides additional amount to the business as a loan, but interest is not given in partnership deed, then we have to assume 6% per annum interest on that interest on partner's loan. This provision is recorded in Indian Partnership Act. Okay. Let's take an example for interest on partner's loan. Here, Mr. P is a partner in PQR partnership firm. He provides loan of rupees 50,000 to the firm. And here clearly mentioned that rate of interest on loan is not given. Then, as per provision, interest on loan will be calculated as a 6%. Okay. Interest on loan will be rupees 50,000 into 6% is equal to rupees 3,000. Here interest on loan is not given in sum, then as per provision interest on partner's loan will be calculated at 6% per annum. Okay. Next is interest on capital. If partnership deed is silent about interest on capital, then interest is not allowed. Don't confuse with interest on partner's loan and interest on capital. Earlier, that is interest on partner's loan is when partners provide some additional amount to the business as a loan. Then it will be treated as partner's loan. And in fourth point, interest on capital, that is contribution from partners. Okay, it will be treated as capital. When in fourth point partnership deed is silent about interest on capital, then no interest will be given on capital. Okay, this is provided in Indian Partnership Act 1932. Next provision is salary or commission to the partners. As per provision made in the Indian Partnership Act, there is no salary, commission, allowances or any other remuneration to be given to any partners for any extra work done for the firm. Here it is clearly mentioned that Partnership Act doesn't allow any salary, commission, allowances or remuneration to the partners for any work done for the firm. But if any provision is made in partnership deed, okay, then partners can get any commission or salary as per that agreement. Okay. Next provision is admission of new partner. As per provision of Indian Partnership Act, no outside person can be admitted into the firm as a partner without the consent of other partners. Okay, means any outsider persons want to admit in existing firm, then he can be admitted into the firm as a partner only when there will be the consent of all other or existing partner. Okay. Let's take one example. Suppose there is a firm of Mr. A and B. After some time, Mr. C want to admit in the firm. Mr. C can be admitted into the firm when there will be the consent of both partner, that is Mr. A and Mr. B. Okay. Now we will stop here now. In next video we will see some important topics related to the partnership firm. Thanks for watching.